Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, December 26, 2024. It is 10:26 a.m. Eastern Time. So I'm starting the video, so we're about an hour into the trading day. I am in quasi-vacation mode. I'm here. I haven't left town. We don't have any big out-of-town plans. May leave around New Year's. Go out of town real quick, short trip. But either way, I'll be working and just kind of in and out in the next few days, spending time with family, just taking a little time off. And as I've repeatedly stated, trading between Thanksgiving and New Year's is very usually proves futile for swing traders. You have low volume. Most people are taking the time off. End of year position squaring. So it's just chock full of whipsaws and false buy and sell signals. But with that being said, I know some of you are probably wanting to know what's going on, looking for trade ideas, and that's what I'm always doing. So I'm going to do this kind of a potpourri mix of just various things, unrelated stuff I'm watching. I'm going to start out here with UPS. I like this one as a long trade idea, so considered an official long right now. I was going to screenshot the chart, get out to you, but I'll just cover it in the video, and then maybe I'll follow up with a screenshot under the post after I make the video. So if you recall, UPS, the last time we traded it, we went in, well, I can't remember exactly the entrance. I had two targets for you, and we hit the second one. We actually bypassed it. When you gap up on a stock, if you're long and it bypasses the price target on that I have my final target on the site, then that's where you're going to be filled. A good to cancel limit order to sell at the trend line, whatever it was, will be filled where you gap up to, and that's so we gapped up. We hit 145 at the open and nailed the exit. And at that point, I said close it out. That's the final trade. I had two potential targets, and but I didn't extend those. Potentials, just that potential. Official targets are those. So either way, we nailed that one, got out, and it's time to get back in. Wash, rinse, repeat. The whole basis for buying it back here was we were coming off a big divergent low, and there was other reasons. I'm trying again. You can reference the trade. It's easy under this post. Just click on UPS on the symbol tags. It'll take you to the previous post. But either way, it doesn't matter. That's irrespective of this trade. This is the divergence has gotten even bigger. So we just made a marginal new low. And remember, I don't buy. Divergence is not a buy signal or a sell signal if it's negative divergence. It's a condition that often precedes trend reversals. But what I like to do is align divergence, be it bullish or bearish, with support resistance levels. In this case, this is a pullback to support. And not just that previous low. That is certainly something. A lot of traders are going to watch that. That's round trip. That was a run of about 17%. Back to where we are, coming off that level. But even better is the weekly chart. When I go to the weekly chart, it gives you the bigger picture on UPS. So you can see here, we've had some trends in the last few years. We're going all the way back to 2010, late 09 here on the chart. You had a bull market here. You had a divergent high by a double-digit correction. DH1, that divergence got even bigger, gave you an even bigger correction, well into the double-digit drop. That was about a 38, almost 40% drop. From there, we had another leg up with a divergent high 1, double-digit drop, divergent high 2. Again, it's consecutive, just larger divergence, and that set this whole downtrend line. So that's where we bought before, which again, it was also support back then. And so my point is, if we bounce back then, when we went long before, it's even better support now because we have an additional reaction. So you can see here, it was really capped all the advances up before COVID hit. And then you had a big post-COVID breakout. So we're back testing that. And positive divergence on the weekly chart. So this time around, should the market hold up this year into 2025, at least first part. I don't care what happens in October, November. I'm looking out, this is a multi-week, multi-month swing trade potential. Nice dual resistance level. Let's just say that's a sweet spot swing trend target, about 156 right there. And if hit, that's going to give you a profit of about 25%. And then that also sets up, big divergence. You could break out of that trend line. There may be additional targets, but let's just keep it at that for now. So, and that would be, you can see the downtrend line that I had on the daily chart before there. So, also resistance there. So, that's it. That's one of my favorites. For the record, I do not like its partner in crime, FedEx, or its competitor, I should say. FedEx, could certainly drift higher, but I don't like this chart. It's coming off a big divergent high. It's almost an opposite chart. So again, UPS, I do not like FedEx. Kind of random stuff here. I laid out to you last week. I really like the miners right now. I think they're setting up nice. Got coming off support. My beloved positive divergence on the daily chart, again on a pullback to support. That's a daily chart there. This is a 60-minute chart, divergent low as well. This has been a great swing trading vehicle. I've highlighted numerous long and short entries on the miners. Really, I mean, forever. I cover these, almost consistently throughout time. There are times I kind of sidestep the trade when it's moving around. But just to reiterate, I like that, and I'm going to follow up. Somebody asked, I did check, there was a question put to me on the base metals. I'll get to those in 1 second. Let me just say that to be bullish in the miners, you want to be make a case that gold's going to rally because the miners will follow gold. They typically just move in a multiple of gold, meaning if gold goes up 10%, they go up. It's not a set formula, but 15, 20, sometimes more. So they move up and down in a multiple of gold. This is gold. This is that uptrend line right there. One of the trend lines I have. I have different boards, but either way, I've got it. That's the same trend line there. So I have it at a decent trend line support. Still in a bull trend, so that's it. I mean, let's not make it any more complicated than it needs to be. That's we were short here, and I highlighted that breakdown and that. And so, if you were a gold bug, you were able to sidestep a quarter of your gains, given back, or actually, I should say that would assume that you were, depending where you're at. But yeah, that was a 20. Yeah, I'll call it that because it's a 25% drop, depending again where you got in. Either way, take it, don't take it, up to you. It's just one that looks good right now. Stops are going to be commensurate where you think it's going. If you're a long-term gold bug and you think gold's going to the moon and back or much higher, then maybe just buy it here and then, set your stops, use a wider stop and let it run. If you just want to swing trade, a bounce trade, well, we'll go back to the 60-minute charts. I'll follow up on this, but I haven't marked up the targets yet. Just kind of like getting in here and with a stop somewhat below, because again, we're buying it at support with gold at support. So a little bit of room. I'd say you don't want to see it go much below $33 right there. I have a little low reaction right here at about 30. Yeah, call it about 33. I think that's a very reasonable stop for it. It's not too much, especially compared to the upside potential. Okay, somebody asked me about the base metals. That is, I think, IGX 1060 will show me all the miners, metals and mining. And so here it is. Can you please update base metals like Rio, BHP, etc.? They're going to move. I don't know. Somebody with thumbs down question request, but either way, the metals they're going to move together. The industrial and base metals and gold miners, they tend to move together. Now, looking at this chart, I will say, don't get married to any one trade. That's a given. I shouldn't have to say that, but that's just a given. That looks like a potential bear flag right there. So be careful if there's a big thrust down. Again, that's where I already outlined a stop, not too far below on GDX, because gold could break that trend line that it's at right now that I just showed you. GDX could break support. And so, like any trade, don't get married to it. And remember, let's not forget, they're coming off big divergent highs. I don't have this chart marked up, but that's what I had on GDX. Remember, GDX, gold, all coming off. I'm just going back again to the daily chart. This is a big divergent high that spans all the way from back here, and gold too. So I can, if I want to, and I have made a longer term bearish case. If this divergence plays out, we start breaking support levels, we could head a lot lower in gold. Again, so don't get married. All right, let's get back to that. And just to reiterate, most of the base metals look about the same. Go back to that chart. You can see I have a watch list to the right here. It loads them all. There they go. There's BHP right here. You can see the same thing. You can draw divergences on these guys. Actually, this one, if you really want a nice buy op, if it continues lower, this is really, really good support. It's a line I've had here forever and a day at about 46.65. Again, this particular one. I can't go through each and every one, but so that's what I see. And that's why, give it a little room on the downside, especially some of these. Maybe the gold miners start running first, precious metals, then some of these other ones here, the industrial metals. But either way, that's not too much further, relatively speaking. 5%. Remember, when I say relative, everything's relative. This thing in a bull trend, like here, goes up 171%. Here's a corrective wave that dropped 43%. So again, everything is relative. And so relatively little minimal downside, about 5%. On that particular one, you might want to scale in and then increase and go to full position if and when it gets down to closer to 46.65 with a stop somewhat below. There's Rio. Again, bottom line is they're all a lot of these stocks are coming up on, they're at support. I'm going to move this line up a little bit because that captures more of these recent lows right there. So that's it. And pretty much on most of them, you have some positive divergence as well. They have been in a trading range like I've talked about. I've talked about that with the metals and the miners recently. We've been swing trading these little, what I call an EKG pattern. With GDX, it was more of an upward slope in EKG there, little bouncing trading range. And there it is. So you can see the same common thread. A lot of these have divergence. Some are at support, some aren't. There was an et cetera in that request. So if you want specific chart requests on any of the individual ones, just bump me again in the under this post, and let me know if you want a couple names. I'll mark up the charts and give you some targets or my 2 cents for whatever that's worth. All right. Okay. So one thing to keep in mind is right now I am bearish on the dollar and looking for a turn, I should say, and about to start positioning short. I'm going to show you a few things here. Well, let's start out with the dollar index, UUP. You can trade it as an ETF. A lot of, as I get into some of the other commodities, keep in mind a lot of the commodity, and this is a currency, obviously, ETF, and the commodity ETF and ETNs just paid year-end distributions, embedded capital gains. It's like a big dividend payout. And so you're going to see these big drops. I'm going to get to some of these. Keep in mind, you didn't lose if you were in any of these, like DBC, for example, and DBA, which I have highlighted recently. You see these big drops. But if they paid a distribution of $1, the share price dropped by $1, and you got $1 payout, and it's a wash. So just keep that in mind. So this chart's a little misleading. Let me go to the Forex pairs. Let's start with the biggest one, Euro USD. This is a Euro US dollar pair. So what you're looking at here is when this is moving up, the euro's going up and the dollar's falling against it. The euro is the biggest component by far of the dollar index, over 56% weighting. So this is the most important. And bottom line, you have positive, aka bullish divergence, and you have a trend line if and when broken out. You can see here on the 60-minute chart. I haven't marked it up. It's a little sloppy. Let me go back here. All right, let me get to a couple others I want to show you that stand out if you are a Forex trader. The yen, JPY USD. Yen's the second largest pair in the dollar index, but only at a 13.6% weighting. So even though it's substantially, by far the second largest, again, the euro's the largest, and pretty much an inverse of the dollar because it has such a high weighting. The yen is second largest. Does move the needle, but not nearly as much as the euro. Everything else, you can add it up together, and it doesn't even hardly move the needle. All the other global currencies in the dollar index. So either way, but this one, if you want to trade it, that's why I'm highlighting these. You can concentrate, make it more of a pure play. If you think the dollar is going to go down, then you want to go long some of these pairs. So this is the yen USD JPY dollar yen pair. We had a divergent high here. That was a big drop. Remember, that also took the markets down when we were short on that biggest drop of the year, or in the last few years. We nailed it. That was also with the falling dollar against the yen, and then that fell right to support, put in nice positive divergence, and that was a catalyst for this rally back then. All right. Well, we've come full circle. We put in a divergent high there, had a nice correction. We broke this trend line, dropped, pushed up, just made a slightly marginal new high, but it's still a divergent high. It simply extends these divergences. The divergences are not what I call confirmed. They will be if we get a bearish PPO crossover, and if that effectively puts in a lower high than the previous highs here. So it needs to happen soon, and look for a breakdown of that trend line, and then you can go long the yen, short the dollar, if that's your thing. All right, and if you're interested, I know not many here for trade forex. I get very few requests for that, but if you are, let me know, and I'll zero in on the futures or whatever you want. And then the other one is the peso. I highlighted that recently. The U.S. dollar Mexican peso pair. That one had a big divergent low back here, breakout right here. Breakout, back test. And then it's come full circle. This is a divergent high. I don't have it labeled. That was a divergent low. That's a divergent high. Nice clean uptrend line, which recently broke. And we've been dancing on. This is really good support here. Or pretty decent. Pretty, just eyeing it. Pretty decent support, as is that next level below. So pop below there. We're probably going to go down here. That means the dollar is going to drop against the peso. The Mexican peso will rally. So there's some setups for you. And remember, a falling dollar is bullish for gold. So that's because it takes more dollars to buy an ounce of gold if you freeze supply and demand. So that's kind of all lining up with that, long gold, long GDX trade, or if you want to trade the currencies directly. Something I didn't have on my list, I'm going to include it. Just an update on treasuries. Remember, we went long treasuries last week. Still like them. This is TLT. Did I give you targets? I give you a wedge. Thought I might have given you targets on one of the charts. Let's see here. Either way, we're at support, long-term support. There's the downtrend line. We popped that. A minimum target up here on the daily chart right there. Potentially more. Again, and I also mention it as a indirect hedge to any equity shorts if you are short the indexes. And I'll get to the indexes here at the end. It's just been so whippy. I'm going to deprioritize those right now. Okay, next up, the ag commodities, corn, wheat, particularly the grains. Remember, corn broke out recently of the downtrend line on this chart, but the big thing is this trading range right here. Needs to pop that in the 200-day moving averages, and that would be a pretty good buy signal, very good buy signal in my opinion for corn. Soybeans, they tend to move together, all these three big grains, still setting up with that big divergent low. You can see the positive divergence, and setting up for a nice trend reversal in my opinion. Is wheat, WEAT. I've covered this quite a bit recently. I even gave you a little trend line here on the both on this ETN, WEAT, as well as the futures, which once popped should trigger a nice rally. And I also gave you on the long-term chart of wheat, again, you can reference that and just click WEAT or $ wheat under this post, and it'll bring you back, and then you'll see my long-term chart of wheat. I don't have it queued up now, but we're not far below a multi-decade, very well-defined uptrend line. So if we can go a little bit lower, it's a buy there. Or if it breaks out now, maybe we rally and we don't hit, or we go on to hit that trend line later. Either way, I like the setup. Still has that nice divergence. And just like the miners, it's been a nice hit and run vehicle. We've had a lot of pops here. We get these divergent lows and you get these double-digit rallies, and they often end on the 60-minute chart with negative divergence, just as they did back here. Divergent high right there. Look it out. And just right here, that was a divergent high right there. I'm drawing a freehand tool. It's sloppy, but you got it. So divergent low, rally, divergent high, drop, divergent low, rally, divergent high, drop, divergent low, wash, rinse, repeat. And then sooner or later, the bigger divergences on that daily and weekly chart are likely to play out for a more lasting trend reversal, that instead of zigzagging down, which we do in a downtrend, we'll start to zigzag higher in an uptrend. All right. So on that, let's just talk about the ag commodity ETF. So for quite some time now, been bullish on this one, longer term bullish on agricultural commodities. And as I said, if you don't want to don't have the time or inclination to trade the individual commodities. There's a lot out there: cocoa, coffee, live cattle, wheat, soybeans, sugar. This one has them all in there, and it's been an uptrend. And again, I wanted to point out that it looks like it got the snot knocked out of it. I was tracking this little uptrend line here and wedge, and we did have a divergent high, so time to throw a little caution to the wind there. But with that being said, this is a kind of paints a false picture technically what really happened, again, because there was dividend payout of that. Whenever a dividend or a capital gain is paid out in a mutual fund or an ETF or anything like this, or even a stock for that matter, they drop proportionally by the amount of that, because you get that dividend paid out to you. So you lose $1 in share price, but for every share you get $1 back, and it's a wash. But on the charts, it's going to give you a false picture of a big gap down. Either way, it's also at support. Negative divergence, you get these corrections in a bull market, you get divergent highs, and they do play out for corrections. So maybe a little more, and if we go down a little more, here's a nice downtrend line that will probably coincide with that wheat hitting that long-term uptrend line. But all I can tell you is that's kind of a little iffy. Not iffy, I'm sorry, giving you a little false narrative, if you will, in the charts of what really happened after that dividend was paid out. Or embedded gains, I believe was a capital gain payout. Alrighty, let's see. DBC, DJP, covered that. DJP. You can see this one. Here's another commodity. This is the ETN that didn't pay out. And so you can see it didn't have the big drop. Broad-based commodity tracking ETN. All right, let's move on to the indexes. I'll look at QQQ, Whipsaw City. That's what you get during the holidays. So if I go to this board here, what you had, this is the trend line off the August 5th lows right here. Let me change this to a circle tool. That'll be better. There we go. This is trend line off the August 5th lows, broke down, said, take it with a grain of salt. It is holidays, but it was a breakdown. And then we, on what was that Christmas Eve right there. Remember, Christmas Eve, I didn't work. It's a partial day, trading day, one of the lowest volume trading days of the year. Take that with a massive grain of salt. I mean, this breakdown at least occurred, leading up to that. There was a little more volume. You can see the volume was non-existent. So I put about as much weighting into that as, near zero. But with that being said, we're still above there. So the way I look at this, guys, just a very simplistic view. If QQQ is above that trend line, I would not add to any shorts. If you want to stop out, that's up to you. I'm going to show you we're still above. Remember, most importantly, the sell signal that we had, the trend or swing sell signal that we had lately was the bearish engulfing candle on the weekly. And that was legit. That's a whole week of trading. We're still below that. So that sell signal is very much intact. Again, if you took that, you took it on the weekly chart, meaning now you are swing or trend trading on the weekly time frame. All that matters on the weekly time frame is how the weekly candles close. So from that perspective, even though you had a bearish engulfing here, you never took out. This is the primary trend line off the August 5th lows on the weekly, how I have it drawn, very clean. This is, I think it's a good fit. So that one hasn't broken down yet. This week is to be determined. All right, so we have one more trading day. Let's see if we close here above where we are right now, then it's still not a breakdown. If we close, down here at the lows for the week or below, then we have a sell signal on a break below the trend line with a trend line break. Remember, we still have a bearish engulfing, but that's two different things. That's a candlestick reversal pattern. It either works or doesn't. Stop is relatively small. And again, as I said before, tremendous RR. I said that the odds of it playing out are not very high because it's a counter trend trade. When you go short anything at an all-time high, it's extremely counter trend. And so therefore the odds statistically are going to be, not great, but that's overshadowed, in my opinion, or at least offset by the tremendous RR. You're risking just a couple percentage points to make up to 50% if that does play out. But again, let's not, this is day after Christmas. We've got New Year's coming up. Come in January, we'll see what's going on. We'll see what this plays out. And again, it's just one of many trades. But like I said, at this point, even though we had that bearish engulfing back there, the fact we're above that trend line, just hold tight. You really want to see at this point now, like I said last week, I believe those recent lows get taken out. That should open the door to a much bigger move down if that happens. All right, so that's that. QQQ, just a quick update on the rest of them. SPY actually is back testing the trend line SPY. Let me click on this board here. So as I said, the trend line off the August 5th low is not as well defined in SPY. I got to say that. We don't have a lot of reactions, but we did break down. It was impulsive there, and we are currently back testing. Plus, we have price resistance there. I'll zoom in nice and tight for you. There was a previous high. There was a breakout of it, a back test. We failed it there, and we're back testing. So we are back testing dual resistance levels. Again, one that I don't put it as a 5 on a scale 1 to 5, maybe a 2, if you will, or a 3, but it is resistance. So that's it. So again, indexes, end of the year, no reason to be heavy, if at all, into those long or short, in my opinion. Let's see here. Let me just run through the equal weighteds real quick, just to kind of look at those. RSP, that one broke the same trend line off the August 5th lows and is clearly well above it, but creeping back above that 176.26 support level again. So another reason, just wait at least at this point for a breakdown below those lows if you want to get short. If you want to go long with a stop below the recent lows, and maybe we do get the Santa rally. I've been calling for it, but look, we're still well off the highs and all the equal weighted, everything else. QQQE. Equal weighted, it's still, and that had a very well defined uptrend line, the same uptrend line off the August 5th lows. That one is still well below there, but it's the same story. It's just a handful of overweighted stocks giving a false strength to the stock market when it's not. The stock market's not doing that well recently, and it's vastly and almost dangerously underperforming the top cap weighted indexes like QQQ and SPY. And again, that's as many have pointed out, doesn't guarantee anything, but historically speaking, that's a red flag when you see that kind of market breadth deterioration. It goes until it stops going, and that's it. So sometimes I have seen the rest of the stocks pick it up and kind of catch up and close that gap. So that is certainly a possibility. IWM, as I've been highlighting, is right on that primary uptrend line right there. Successful defense so far. We're above it. Could be flagging, but you'd want to see at this point, in other words, if this is a bear flag, you'd want to see a break not only below the flag, but below the trend line and a solid close. That's how it looks on the daily chart there. You've got the weekly chart nice and clean as well. Even better if you get a solid breakdown on the weekly chart. The 200 days are just below. So there's your update on all the indexes pretty much. Semis. Remember, to me, it's about I put a very high weighting on NVDA, which I'll get to in a second. And this is SOXX Semiconductor Index, PHLX Semiconductor Sector ETF. There's the October of 2022 lows, that trend line. We're still below, back testing from below since we broke down right here. And there's the downtrend line. So we're still, as we were last week, we're pinching. We've been back testing the trend line from below and back testing also this downtrend line. And so they're pinched. It's double resistance right there. But again, as I've been saying, you want to see 209.55. These recent lows get taken out. And if and when that happens, that would be bearish, triggering a sell signal or an objective add-on or new short entry into the semis. They are also back testing, as I pointed out, the 200-day moving averages right here. The 200 simple is the blue line right there. And typically when you take them out like you did there, you're in a bear trend. And when you regain them like you did there, you're in a bull trend, and you buy pullbacks to them. So recently, you can't say we've clearly taken them out. They have a tendency to briefly cut through on the upside or downside, and so this is basically just a test, and it's very simple in my opinion. Bulls win here because you would have taken out the downtrend line and also recovered back above that uptrend line I gave you. Bears win if you get a rejection, but you got to take out those recent lows, guys. And then it's all about this stock. NVIDIA, the stock market is all about this stock. The semis are all about this stock. And this stock is still below the very, very, very well-defined primary uptrend line. Comes off the October 2022 lows. Also, you had some price support here. You slightly undercut it holiday whipsaw, normal stuff. And that's it. So, if we regain solidly back above the trend line, then that's nothing but bullish. I can't spin that as anything but bullish. You will still have, and I'll be talking about it, you'll still have big divergent high that's setting the stage for a bigger drop down the road, but that bigger drop may just have to be postponed. But right until then, again, we have to undercut these recent lows, and that will then take us to the 200s, and once those go, then that opens the door to longer term targets. So that is a semis. Again, this is just holiday grinding. Don't try to read too much into it, because that's what it is. The stock is in a near-term downtrend with a longer-term uptrend. This is the near-term downtrend series of lower highs and lower lows. So watch that downtrend line there. Okay, and the VIX volatility index is, let's take a look at that. Give you that on a 60-minute chart recently. Another EKG, you look for these divergent lows, you get the rally, 372%, 61%, 55, 90. We were long both this one and this one, if not that one as well. You can check the site, I can't recall, but that's it. So you get these little corrections in the stock market, and you get rallies in the VIX. And as I mentioned before, you have a bullish falling wedge, which we broke out of. This is really good long-term support on the VIX. We're only looking at a 60-minute chart, but I showed you out on the weekly. And you had that rally. You've pulled back. You can see here, this is a nice clean uptrend line. This is the spot VIX, of course. And boom, boom, boom. And that was a level I had there before, my first resistance level. I'll give you the setup back here. And we've pulled all the way back to that level. So we have dual support. So ideally the VIX, if we're going to get another leg down in the market, it should happen soon. And we certainly have the potential. Again, with QQQ back above that trend line, normally I might say, yeah, this is a great place to load up, go all in. There were several pullback points to support that I highlighted, and we should have, and they didn't buy the VIX. They're back to support here. Could take off. If you don't have a position, I can't advise you what to do, but I would say not take a full or heavy position, maybe a partial position. Wait and see if QQQ falls back below that trend line. If it does, you'd have to be, buying this a little higher, the VIX. Again, you don't buy the spot VIX, you buy VIXY. I'll cover that in a second, but the same thing. That's it. So you want to see, ideally, the VIX start to move up here, and most importantly, QQQ breakdown, and everything I just covered on the indexes. Take out the recent lows. VIXY, remember, is going to track the VIX as best it can, but it's not perfect because it's an ETN with expenses and all that, or an ETF, either one. Still coming off that divergent low, so it's back to pretty much to the breakout point right now, and right around on that uptrend line as well. And that's it. So, either the market will reverse soon, this starts to play out, or it just goes back to its, we're back to that long-term. Let me do the spot VIX. You don't want to look at VIXY on a long-term chart. You want to look at the spot VIX. And again, this is it. Coming off that big divergent low there, and this is long-term extreme low there, but this is a level in recent years has contained all the pullbacks, including this one. Oh, I just wanted to, before I wrap this up, I almost forgot, wanted to cover natural gas. So nat gas, remember we were in before the Januaries. Those stopped trade, I believe. They haven't stopped trading, they're about to tomorrow, next day. I already rolled into the Febs. But this one here did break out, as I highlighted, broke out above the downtrend line, and also put in big divergent high right there, negative divergence there. So we could get a deeper correction, but this was a January contract right here. So it did and has broken out. However, the Februaries, which started taking more volume earlier this week, is that the January? Yeah, that's the January. Here's the February. February contract failed at that comparable resistance. Comparable meaning all these previous reaction highs right here. Remember, these are the way natural gas prices are so volatile, and the way it works with it's got to be piped to pipelines. It's hard to store. It doesn't really store like crude oil. You have much more volatility in price differentials from month to month. And so the February contract rallied right into that, and now we pulled back to support. Took out a little minor trend line. We did have divergence, and sometimes those divergences can lead to a bigger pullback. Right now, what we need to do is really on the February now, which we're working on, punch through those previous highs. It'd be ideal, and then you have a confirmed uptrend, meaning higher lows and higher highs. We do have that early on. I'd want to see one more soon, especially before we take out this previous reaction low. So all I can tell you, we're at support now. It's down today. It's down in a normal amount. Natural gas is volatile. It's down 5% or so, which is a daily average move for natural gas. And that's it. At support. I haven't fully marked up this chart since I rolled to the Februaries, but that's one support level there. There's not really super well-defined support. You got a little bit of support right there. Most important, again, would be keep this uptrend intact, these higher lows, and stay above this low here. Or, more importantly, to increase or add to a position or take one if you don't have one, is a breakout above about 355. And that should open the door to that $5 longer-term swing target that I have. Okay, that's about it. If there's anything else you want, just drop me a line in the comments section. Like I said, I'll be in and out through the rest of the year. More out than in, but if I see anything that stands out, I'll try to get it out to you. This has been Randy Finney with Right Side of the Chart. Have a great day.